Yo, what's good, y'all? It's been a minute since I made a video, so I just wanted to come in with a end of the year recap. I finally locked down my first payout. I actually got it last month in November, and that's the stats I got up right here. And it took me a while to kind of get everything under control to put me in a position to actually have this month. As you can see, I only had 2 red days on the month. So I had a full week of green to start it, a full week of green, 2 red days on Tuesday and Thursday, and then a week of green to end it. And I actually got the payout denied once. So you can see I requested it on the 14th for 997, and that one was denied. And then obviously I've blown the account since then. But I then requested it again on November 26th, and that one got paid. So this is my Apex dashboard, and this was the month that I had where I actually locked it down. And the biggest thing for me that made a difference was I stepped back from trading minis and I only traded micros. So every trade that you see on this screen every single day in November, I only traded micros. And honestly, that's something that really blew my mind personally, because I started trading at the end of March, and from March all the way until November, I never thought that I was over leveraged by trading one mini until I downsized to trading 2 micros. And that was when I realized how I was able to keep my emotions out of it and keep my emotions in check. And then once I was able to keep my emotions in check was when I was actually able to really lean on my strategy. And my strategy, basically the way I was trading, and this is my setup, this is how I'll usually trade on a day-to-day basis. So I'll have the 1 minute on this side, the 5 minute in the middle, and the 5 minute is where I execute. The 15 minute here just to have a view, and then I got a smaller 15 minute as well for me to see all the structure. And then I know, it's been a week of very iffy price action up until today because it's the holidays, it's Christmas week, tomorrow's Christmas Eve. You'll probably see this video definitely before New Year's, but I started marking out the previous day value area and point of control, as well as the overnight value area and point of control. But I actually didn't utilize that to get my payout. But this was the setup that I was utilizing, and I did it because when I was trading on just the 1 minute, I was really severely over trading. I would, take a trade, get in, get out. I couldn't have conviction in my trades because, so as you can see, I trade the 25K accounts, and on a 25K Apex account, you get $1,500 in drawdown. The problem with me trading a mini was, if I had a trade that goes 20 points against me, boom, that's $400 in drawdown. And there's instances where it could actually be more than that, because say it went 5 points in my favor first before going 20 points against me, boom, that's $500 in drawdown because of their intraday drawdown. And it was just really hard for me to have conviction and hold trades, because 500 in drawdown is a big blow to the account. Boom, if I lose 2 trades in a row, now I've only got about $500 left in drawdown, and that would always leave me feeling like my back was against the wall. So what I did was I sized down and I started running a bracket, and WealthCharts lets you run a multi-bracket. And what I would do was I would run 2 micros, both of them with the stop loss at 50 points, which is 200 ticks. And then my take profit would be 80 ticks or 20 points to take my first one off. And then my second target would be 200 ticks, which was 50 points. And generally, it actually varies for me a little bit, and I can show you an example here. So basically, this was one that fired off today. And the way that I'll run it, and I'm using all of WealthCharts free indicators, and basically watching price action, aligning levels, checking things out. What I'll do to start the day is I'll come in, I'll get in, I'll check the daily. This is the daily. Then I go to the 4 hour, I'll check out the 4 hour, I'll check out the 1 hour, make sure that all, I'm trying to determine my bias on the higher time frame before going down onto the lower time frame and trying to get in a trade then. And, I'll check out the 30 minute as well. But when I'm executing, basically I'm looking for a 5 minute well signal, and I'm looking for all the 1, 5, and 15 to all be aligned in the same direction. It doesn't matter to me if it's up or down. I just want them all to be aligned in the same direction. And interesting enough, you can actually see here on the 5 minute today, this wealth signal paid, but it was actually in the sell zone. So I didn't take this trade today because I took the day off, just because yesterday's price action was super choppy, just whips on back and forth, no real movement. I had just passed my eval last Friday on this account, and I had it activated, but honestly, I wasn't willing to take a bad step on my first trades of this fresh funded account. But what I'm doing is I'm looking for a 5 minute well signal, and I use the adaptive trailing stop. And so for a while, I would get in as soon as I saw the 5-minute well signal. But what I realized is sometimes the 5-minute well signal will fire, and then price would go the opposite direction, and then boom, the well signal will disappear and it's gone. And it wasn't, I would get faked out. So now I'm usually waiting for that 5-minute candle to actually close before I'm entering. So this is the way that I usually will plan to enter my trades. Like I said, I'll figure out my bias, I'll figure out which direction I'm looking to get in, and then I'm waiting on this well signal. This well signal is my green light. Once I get my green light, I'm actively looking for my entry, my target, and my stop loss. And so I use the adaptive trailing stop. And so basically today, what I would have done is the well signal fired off, and that 5-minute candle closed at 25,704 and a quarter. So that would have been my entry. And then it tells me that the stop loss would have been 25,672. And that's another reason why I downsized to micros, because I wanted to be able to risk, what is that, 704 to 72, what is that, 28, 32. So that's risking 32 points. If I'm risking 32 points on one mini and I'm wrong, well, that's $640. And like I said, if it goes in my favor before it goes against me, then I might lose more than 640 drawdown. And on a 25K account with only 1,500, that's almost half of my drawdown, which really leaves me in a tough situation on my next trade to where I feel like I have to hit. And on the 5-minute, what I realized too is there's a lot of instances where sometimes, like you can see this one fired off and it pulled back and actually offered a resumption trade before going up and hitting the target. But sometimes you can see here, so 693, and then it pulled back to 85. That's only 8 points because that was an overnight trade at 2 in the morning. But sometimes the trade would go against me before I was right. And there was a lot of instances where I would end up being wrong 20, 30, 40 points before I'm right. My trade, my thesis was correct. My entry was correct, but I'm not always sniping perfect entries. I'm not really a reversal trader. I'm a momentum trader. And because I'm not a reversal trader, I'm not always getting into positions where there's no drawdown. As you can see, this one today was beautiful. So basically 704 would have been the entry, 72, 71, 71.75 would have been the stop, and that's 33 points. So that basically, I'm targeting 1-to-1. If I'm risking 33 points, I'm looking to take 33 points as well. So that means that my target would be 37, and boom, that candle hit in the 10 a.m. candle. So from a 9:40 entry, by 10 a.m., my target would have been hit. And minimal drawdown, as you can see, in the next candle it dipped below, but buyers stepped in and bought it up real quick. And it's also another great sign because after my entry, boom, the next candle actually printed a higher low, kind of letting me know, okay, cool, I'm in a good position to ride this momentum. And like I said, I'll target a 1-to-1, and that means that my target would have been at 37. And the way that I use my bracket is my first target is at 20 points. So 27, I would have took my first target, and that's on a micro. So that's locking in $40. And then my second target would be equivalent to my where my risk is at. Wherever my adaptive trailing stop, in this instance 33 points, that would have made my target 33 points. And so I would have been looking to take my second contract at that 33 point mark. And usually what I did last time as well, whenever I locked in the payout, was once I got past $1,000 in profit, I bumped it up to a third micro, and that was where I would let that third actually be my runner. And so as you can see here, the adaptive trailing stop ran to 64, which is almost 30 points past my target. So what I would do was I would get in at 04, and then it's stopping you out at 64. So boom, that's a 60-point move. So what I would do is I would have my first entry, or I would have my entry, but with 3 micros. My first contract would come off at 20. My second contract would come off at 50 points. And then my third contract would be my runner. And that's where I would let it breathe a little bit. And that's where I would maximize on my profit. And the reason why I started to do that was because, so let's use this same example, for instance. So let's say that it comes in my favor 20 points. It takes off one contract. Well, now, so I have a 33-point stop loss. And on 2 micros, that means that 33 points would be about, 33 times 4? So about $128 risk on this trade. Well, if it goes 20 points in my favor, so 04 up to 24, basically within 10 minutes in this second 5-minute candle, it's getting off my first contract. Well, now I only have 1 contract at risk, and I've already locked in $40. So I locked in $40, and since I'm only risking 1 micro, at this point, the adaptive trailing stop hadn't really trailed yet, so I'm still risking those 33 points. But now, instead of risking that $128, I'm only risking $66, or I guess it would be $132. I'm only risking $66, and I've already locked in 40. So really, I'm only risking $26 and trailing drawdown. So basically, that was what would allow me to hold my trades with conviction and not close my trades real quick because I was scared for them to go against me. Because with the 5-minute well signals, I realized that there's just a lot less fake outs. And so as you can see today, one fired off to the downside at 7:35, but that was because there was a a news release today. What dropped? At 7:30, it was the preliminary GDP. So that dropped at 7:30, and then boom, the wealth signal fired off. But honestly, I really don't trade the pre-market just because there was days where I would get into a trade and it was before the market had opened, so there was more volume. And when I would get into those instances, they wouldn't always work out for me. So generally, I'll just wait for market open, and because I need the volume for my momentum strategy to be successful. And as you can see here, the trade was successful, but this was actually, so the market opened on this big green candle, and then the market closed right here at the steep VWAP, and this was the only 5-minute wealth signal of the day. Well, on the 1-minute chart, let's see. Yeah, see, so you can see on the 1-minute chart today, let's see, let's scroll back a little bit and just do up until 5 o'clock. So basically on the 1 minute, there was 1, 2, 3, 4, 5, 6, 7, 8 wealth signals fired off on the 1 minute. And what I realized is you can see, look, this one fired to the downside, this one fired to the downside, this one fired to the upside. It's just basically they're in here fighting, and there's a lot more fake outs. And that was what I realized, was I could just step back to the 5-minute and it'd be a lot cleaner, a lot smoother. And for me personally, because I was having a problem over trading, stepping back to the 5-minute for my entries, that negated me over trading, because automatically I'm getting less opportunities. And less opportunities is okay for me, because less trades on better opportunities was what I needed to get my payout. And so basically I limited my trades. I stopped taking as many trades, and I only took the 5-minute wealth signals the entire month of November, and that was how I locked in the payout. And I really can't believe that the micros was what was necessary for me to get my first payout, but I really do give a lot of credit to Rob Hoffman and WealthCharts and these indicators. These indicators, this is to a lot of people, I can understand how this screen will be too much, but if I'm being honest, this helps me keep my finger on the pulse of the market and have an idea in just a quick glance. And some people might not need this much to be able to get that pulse. Some scalpers, this is too much for them, too much noise. For a lot of people, it's too much noise, but for me, it works. And what works for me might not work for you. What works for you might not work for me, but I'm just shedding some light on how I was able to achieve my first payout. And it took me a while. It was not easy. It was a lot of trials and tribulations, but stepping back to the 5-minute chart was really what I needed. And I didn't realize that until I started journaling my trades. And that was when I really noticed, like, oh, okay, I'm taking too many trades. Sometimes I would take a opening range breakout trade. Sometimes I would take a VWAP bounce. And the one thing that I realized was the wealth signal trades were always the trades that I would print on. And then it was one day where I was watching the 1 minute, like I showed you. I'm watching the 1 minute. And so today, we'll go to today's open. Today's 1 minute fired off at 9:30, and then boom, that's the start of a good looking trend. But there was days where the trend would start and then it would have deep pullbacks. And today, this is a decent example of the resumption trades. And so basically, let's line this up. This is at 10:08. And then on the 5 minute, yeah, see, so this is that little pullback on the 1 minute. And there's a lot of times where, sometimes if I'm on the 1 minute chart trading this, okay, this wealth signal fired off at 9:30. This one fired off at 9:35. So, if you're alert enough, boom, you can get in, and this is where maybe you can get that good sniper entry. The wealth signal fires off, it comes up, it retests the VWAP, boom, that's a money entry right there. You get in after that retest at 9:32, and then you're off to the races. Well, for me, my entry would have been basically at the open of the 940 candle at 7:03. Well, you had an opportunity to be in here 20 points earlier at 682, but I had just been burned too many times on the 1 minute fake wealth signals that I just started laying off and relying on the 5-minute wealth signals, and then you get a good clean trend. And so for Rob Hoffman, it's funny because in the wealth summits that Apex hosts, he wouldn't even use the adaptive trailing stop and close his trade right here at 763. To him, the trend isn't over until it closes on the other side of, he calls it the champion cross. It's basically an EMA cluster. I believe it's the 9 and 21 EMA. I'm not sure exactly because it's all made off of proprietary data that only he has access to. But to my knowledge, based on my assessment, his champion cross is the EMA cluster. And he wouldn't have, like I said, he wouldn't have got stopped out here. He would have got in here. He would have came in. He would have added on this resumption trade. And he's only closing when a candle closes on the opposite side of the EMA cluster. And that didn't happen until 5:30. So that didn't happen. The market closed and the trend still didn't end in his eyes. So, for Rob Hoffman, his entry would have been at 04, and then he would have held it until the end of the day, all the way up to 806 for a 100-point gain. And he would have held it, with conviction, because he's the one, this is his strategy. And, that's also what's really inspiring to me is I was able to lock in a payout using his wealth signal and resumption trade strategy. And I utilize the adaptive trailing stop to help me protect my drawdown and lock in gains, because basically you could have had it stop you out here, you lock in 60 points, it chops around, so it would have stopped you out at 11, and then at 12:05, an hour later, it presents you with an opportunity for a resumption trade. And so say you get in on right here. So what I would do is this candle closed at 7:51. It's saying that the stop would have been at 38. That's only suggesting a 13-point stop. That is a little bit of a tougher instance for me, because basically when I'm getting into the trade as it leaves the EMA cluster at 760, I would only be looking for a 13-point move, which ends up hitting 773. You know, you can get that 13 points, you know, pretty easy. And what, 12, 20, and 15 minutes. You lock in that 13 points. So my strategy is basically a shell of his, because like I said, he would have locked in 100 points on that strategy and been able to add. So he would get in, boom, he adds on this resumption trade. He adds, you know, possibly adds here on this candle, because it popped out a little bit and then it kept pulling back a little bit. And then boom, he's adding again here. It comes back, another resumption trade here, another entry here. And that's why I love the resumption trades, because like I said, in Rob Hoffman's eyes, the trend is not over until it closes on the opposite side of the EMA cluster. And so like I said, today, that didn't happen until 5:30. So boom, he has his first entry. This is a possible second entry, a third, a fourth, a fifth, a sixth, a seventh, an eighth. And so basically you have the opportunity to add into this trade possibly 8 times. And I have a 4 mini limit. Four minis or 40 micros is the max that I can trade on the Apex 25K accounts. But according to his strategy, there's multiple entry opportunities. And even if you miss here, okay, no big deal. Well, here's a resumption trade right here. You miss here, okay, no big deal. Here's another resumption trade here. And that's the thing that's so inspiring to me, is I was able to lock in a payout utilizing this strategy, where today, according to my adaptive trailing stop, protecting my drawdown, I could have locked in 33 points pretty effortless. But according to the way that he utilizes the strategy, he would have been able to get his entry at 940 and hold it until market close, because the trend never ended and closed across. So I'm inspired because I was able to lock in my first payout successfully, and there's still so much more opportunity for me to grow. As you can see today, his strategy would have afforded you the opportunity to take 100 points from the market. If you're trading one mini, 100 points, that's $2,000. That's a phenomenal day in anyone's eyes. $2,000, some people work, 2-3 weeks for that. Some people don't make that in an entire month if they're working, a minimum wage type job. And even 33 points on 2 micros, I still would have been able to lock in $100 risk-free in 20 minutes. And those base hits is really what gets you the payouts. So like I said, I just stepped back from the 1 minute to the 5 minute. I started trading the 5 minute well signals. I started stacking up my base hits. I started protecting my drawdown. I started managing my risk, and when I managed my risk, that was what put me in a position to actually be able to stack enough base hits to get a payout. So I just wanted to come in and I wanted to share with everybody how I was able to lock in a payout. And also, WealthCharts and Apex is hosting their Wealth Summit next month in January. I believe it's January 18th is when they're hosting it. So if this video wasn't enough for you to understand Rob Hoffman's wealth signal and resumption trade strategy, if you're trading with Apex now, you can sign up to the Wealth Summit for free, completely free. And that's why I love WealthCharts. And it's hilarious because, TopStep X has been having a bunch of drama lately because they're having all sorts of outages and stuff. I've never had a problem with WealthCharts. Never. Any problems I've had with WealthCharts have been user error, self-inflicted problems. I've never had outages. I've never experienced a position where I wasn't able to trade, where I got into a trade and it wouldn't let me close a position. None of that. TopStep X has been really struggling with that lately. And, using WealthCharts, I can't relate to those problems whatsoever. But that Wealth Summit is coming up next month. It's completely free. I thoroughly enjoyed it. I attribute most of my success to Rob Hoffman and these strategies. They put me in a position to be able to achieve my first payout. And I spent this year so far $1,287 on Apex accounts and $542 on take profit accounts, and got my one $1,500 payout from Apex. So I'm still a little bit red on the year, but the fact that I was able to get proof of concept using the 5-minute well signals is inspiring to me, especially because, like I said, I'm not even utilizing the strategy the way that Rob teaches it. I'm utilizing it in a shell. So the fact that I'm down a little bit, what did I say? 1287 and 542, so about $1,800. I'm about $350 in the red using prop firms this year. But I've got a fresh PA account with Apex right now, full drawdown in check, and I'm ready to start the year on a strong foot. I'm ready to, lock in my next payout. And the one thing that I can say to everybody is patience pays. A lot of people want to trade more and think that trading more will help them earn more. But the reality is for a lot of traders, trading less but good opportunities is more than enough to get you paid. So that's why I stepped back to the 5 minute. The 5 minute helped me, identify proper opportunities for me to capitalize on, to protect my capital, to protect my drawdown, put me in a position to manage my risk. And I really had to downsize because, you know, I can risk 2 micros and hold it with conviction, but 1 mini risking that 33 points, it played with my mind a little bit because, like I said, that's, you know, potentially half of my account drawdown gone in 1 trade if the trade does go against me. So like I said, I really just wanted to, you know, make another video. It's been a while since I had made one. You know, shout out to everybody that's made it this far in the video. Drop a like, you know, subscribe if you want to get more updates on this journey. Next year I'm definitely going to be dropping more informational videos about wealth charts, about my journey, you know, more payouts. So, and I want to expand to more prop firms as well. But the thing is that WealthCharts is only with Apex. So a lot of people say that Apex has some of the toughest rules in the industry. And look, I can tell you personally that, yeah, the rules are not easy, but I can also tell you if you follow the rules, you will get paid. You know, I got the payout, you know, as you can see here, $1,500 paid November 26th. So if I can do it, you can do it. And if this video wasn't enough for you, I tell you, just go check out the Wealth Summit next month. It's free. It'll be 6 days of infinite sauce. Rob Hoffman always puts on a great show. He always has a lot of speakers, you know, just giving out free game, helping people make money. And at the same time, too, it's called the Wealth Summit. We're all doing this to take a step in the right direction of building wealth. So, you know, isn't a Wealth Summit the place that you want to be at? So I'll leave y'all with that. Until next time, peace.